In the blink of an eye, 2020 is behind us. As a closure, I would like to use this video to reflect on the actions that I've done for my long-term portfolio, my performance thus far, and also a quick review on my 75,000 portfolio. After that, let us take a look at the stocks that I have evaluated for you guys last year, and finally talk about the things that I'll be looking out for in 2021. And before we begin, I would like to wish all of us here a safe, healthy, and prosperous new year ahead. A lot of things have happened in 2020. First of all, we have the US-China trade war that has been resolving in the first 2 months of the year, and followed by the huge crash caused by COVID, which was very unexpected. And then the very swift and quick sharp recovery due to all the fiscal stimulus as well as the quantitative easing that has been brought forward by the US government. And lastly, we have the US election uncertainty. And finally, the release of the election results in which Biden has won, and that brings us into 2021. So despite a chaotic 2020 filled with uncertainty, the S&P 500 has in fact done very well. Despite all the ups and downs, we have the S&P 500 returning us almost 15 to 16%. So that is in fact considered very good if we take into account that the S&P 500 have an average return of 9 to 10% over the long term. With that, how has my long-term portfolio performed? I started off the year with a net liquidating value of 31.7 thousand. And I ended off 2020 with a net liquidating value of 75.5 thousand. So overall, this is a 43.8 thousand gain, but I have been depositing quarterly. Out of this increase, we have to take away 4 times 6,000, which is 24K. And with that, the whole portfolio posted a profit of 19.8 thousand. So taking all of this into account, and if I do a rough calculation using time-weighted return, that gives us a 49.45, close to 50% return, which I am very satisfied. Unfortunately, because Think or Swim, they do not have an annual consolidated results, I could not show you any concrete statement, and I can only do a rough calculation from here. In subsequent videos where I review my trading portfolio from interactive brokers, you'll be able to see the consolidated statements from the broker itself. Alright, so with that, let us quickly go through my long-term portfolio and a list of stocks that I'm holding that allow me to achieve such a return, and then we'll move on to look at where the profits come from. Alright, so what we are looking at right now is the list of stocks that I am holding under Think or Swim. First up, we have ITA, which is an US Aerospace Defense ETF, 10.09 shares. So this is the trade price that I have entered for my shares, and this is the current market value. Right, so for this, I'm currently down almost 20%. Next, I have Merck. This is just a very small position, just holding 2.6 shares, entered at this price, and it is currently at 84. Alright, so my position in Merck comes from the profit that I've earned using the dividend capture strategy. And that is why you are seeing that the position size in this stock is so small. After that, we have AbbVie. So AbbVie is also another of my dividend capture strategy play that I'm currently in right now. Right, so I'm holding 201 shares. I'll be waiting for its dividend that's coming in a few days' time, and after that, I'll be exiting the position. So this is currently the largest position in my account, but it is only temporary at $107. That gives us a total market value of 22,000. Next, we have EWH, which is a Hong Kong ETF. So basically, I use this to allow my long-term portfolio to gain exposure to overseas countries, and in this case, the Hong Kong market. I have 100 shares in this. At a trade price of $24, it is currently having a market value of 2.6 thousand. Next, we have J&J, another of my dividend capture strategy play that I've bought using the profits that I've gained. And then we have FXI, a China large cap ETF, 153 shares, bought at 43.3. Right now it is at 48.3. Next, Bank of America, only 4.2 shares. Unfortunately, I used to have more, but it was caught away by my covered call. Right, so this Trade price was 29.3 and right now it is at 33.24. Next, I have Facebook, one of my value growth investing stock. For this, I have 18 shares, bought at an average of 204, and right now it is at 257. And then we have EM, Emerging Markets ETF, another position that I use to allow my long-term portfolio to gain exposure to the emerging markets out there. You can see this as a diversification to the US market. 202 shares at 41.8 per share, and right now it is at 54.31. FedEx, 7.15 shares at 183. And then we have Alibaba, 12 shares at 170, another of my value growth investing stock. Google as well, just 3 shares, entered at an average of $1,300. Starbucks, a dividend capture strategy play, 1.37 shares bought using the profits at a price of 76.7. JPM, another bank, just 1 share, also bought from the dividend capture strategy profits. GXC, another China ETF, just 20 shares at 97.55. Disney, which I've entered just last year during March, 10 shares at 120. For Disney, it is more of a value and predictive play and not so much of growth. And then Tencent ADR, 44.2 shares at a price of 44.9, a value growth investing stock. Amazon, 2 shares, entered at a price of 1,824. Right, and lastly, I have Novavax, ticker NVAX, just 5 shares at a trade price of $20. So this is a speculative play that I will not be touching on much. Alright, so there goes my entire portfolio, and this list of portfolio is listed in terms of return. So ITA is the worst performing stock so far, and then we have Amazon as the best performing position for my portfolio so far at 71.5% return. Just a rough estimate from the stock holdings, I'm currently sitting at a profit and loss of 13.3 thousand since I opened these positions, and my market value of all these positions is standing at 74.25 thousand. Bear in mind that at V I'll be exiting soon, so this 22,000 will be held in cash. In addition to the $6,000 balance that is in my account right now, my portfolio is made up of almost 28,000 in cash, waiting for stocks to fall into fair value or undervalue range before I buy them up, and about 52,000 in stock holdings. Alright, so if we break down the holdings in my long-term portfolio, it will look something like this. On the left, you can see the percentages of the respective positions and how much they weigh in my portfolio. And on the right, what you're seeing is the market value of these positions right now. The bulk of the 19,000 profits comes from my stock holdings, definitely more than 50% of it. And next, where does the remaining profits come from? What you're seeing on the upper portion is my stock holdings, and the lower portion is my option holdings. So for those of you who have been following my option portfolio management video series, you would have known that that portion of the portfolio comes under my long-term investing. And I've been taking a lot of actions using options to boost my returns for my long-term portfolio as I move on throughout the year. The next heaviest contribution to my 2020 profits should come from the premium that I've collected by selling cash secured put and covered calls under the wheel strategy. So this is my personal trading log for my wheel strategy under the long-term portfolio, and you can see that ever since the start of the year in 2020, I've been selling numerous cash secured put as well as covered calls to earn premium on my stock holding. Overall, I've collected a total of almost 3,300 by selling these options, and most of them have expired worthless. Alright, and just a quick run through of options that I've been selling. Most of them are from my EEM and FXI holdings, as well as cash secure puts on the Bank of America. Right, wanting to get into the stock ever since it has been hovering and consolidating around the $24 and $25 range. Right, so throughout the year, I've been doing the same thing repeatedly over and over again, month after month. And towards the end of the year, started doing a little bit on Yum China and also one on Starbucks. And you can see that most of them has been profitable except for my FXI and EM positions, which are starting to get into a little bit of a trouble. And as we move on into the later part of 2020, my cash deposit in the portfolio is starting to build up with nothing much of value to buy. What I've done is to start the dividend capture strategy to make use of the idle cash that's sitting around in my portfolio and use them to make some quick profits, right? And as well as to build up my dividend positions along the way. So this is my journal for the strategy itself. In a short span of 4 to 5 months, the strategy has brought in another 2,000 in terms of profit, most of which have been reinvested into the small little stock positions that you have seen previously. So if you are interested in this strategy, I'll be making a strategy tutorial covering it very soon. So stay tuned to the channel and make sure to subscribe. And lastly, if you have been following the options portfolio management series, you would have known that my long-term portfolio consists of a leap Apple calendar trade. I have not really consolidated the earnings, but if we were to take a look at the risk profile of the trade right now, it is currently like this. I'm holding the 20 January 2023 115 strike call, and I'm short the 5 February 2021 call. So this gives me a break-even price of 94.7 and 183. Right, so currently with the trade price of Apple, which is at 128, my unrealized profit is at $1,000. And if it stays at this price at expiration, I would have a profit of 1.2K. All right, so there's a quick summary of my portfolio and a review of my performance for 2020. Let's take a look at some of my long-term value investing analysis done last year. From the start of the year, 6 January 2020, I've covered 5G stocks that are up and coming. And from there, I've ranked my personal preference on some of these stocks. On the chart below, you can see their performance over the year after since I have released my video. Out of these 5G tech stocks that I have covered, TSM turns out to be the best performer out of the five, sitting at a year-to-date return of 93.36%, followed by QCOM 71%, XLNX 45, AVGO 36, and then VWM at a slightly negative return for the year. For those of you who has watched this video, I hope you have taken some action and have benefited from my analysis. In the later half of January, I've done another valuation and analysis on the credit services industry, focusing on MasterCard, PayPal, Visa, and American Express. All right, and I remember very clearly in this video I said that the companies in this industry are very overvalued, especially for Visa and MasterCard, sitting at 2 to 3 times above valuation. And as for PayPal and American Express, they are not really that strong fundamentally. Therefore, I will not really invest in them. This is how they have performed over the year. PayPal, despite being very overvalued, is still able to return 100% return in 2020. On the other hand, MasterCard and Visa has been rather stagnant, 8% and 4% return respectively, while American Express has been underperforming at a negative 9.88%. And as COVID struck, I did a little analysis on some of the coronavirus-proof stocks, especially in the gaming industry. Take-Two was the most attractive one, strongest in terms of fundamentals as well as being at a discount back then. This is the performance after I have released the video on 14th of April. Take-Two turns out to be the best performer indeed, returning 66.75 over the last 7 to 8 months, followed by ATVI, Activision Blizzard at 43%, and EA to be the worst performer at 26.14%. Alright, so once again, I hope this video has benefited those of you who have watched it. And lastly, as we head into the last quarter of the year, I've done a value analysis on the American US banks, and I remember saying that the US banks are very cheap right now based on their price to book ratio. right? And this is especially so for the Bank of America, one of the stock that I have been very aggressively selling cash secured put on, right? So after my analysis and releasing of the video, this is how the stocks have performed. Wells Fargo turns out to be the top performer at 23.15%, despite its fundamentals not being as fantastic as its peers. Next, we have JPM, very close to Wells Fargo at 21.38%. Citibank, and our worst performer turns out to be Bank of America at only 14.02%. If these have been of value to you, make sure to help me hit the like and subscribe button. And also stay tuned for more of such videos coming your way in 2021. As we move on to the new year, what will I be focusing on? Some of the stocks that I'll be paying close attention to will be the usual few tech stocks that you would have heard me mention time and again. The first one would be Microsoft, which has been consolidating for some time right now, and I will be doing a valuation for this company very soon, so stay tuned for that. Next up, we have Facebook, also another stock that has been hit by a lot of bad news recently, and in fact, Facebook is sitting at fair valuation right now, right? So I'll be looking at opportunities to enter my position into Facebook, and in fact, I have already entered a small position into Facebook just a few days ago, 6 shares of Facebook at 262. This takes up about 1.5 thousand. And then I've also sold 2 vertical bull put spreads on Facebook expiring the 12th of Feb with a strike of 240 and 235. Alright, so if you're interested in the bull put spread strategy, part 2 has just been uploaded. Make sure to watch both parts of the strategy tutorial in full and let the strategy benefit your portfolio. Besides Facebook, Amazon is also another stock that has been consolidating, and I believe it is at a somewhat fair valuation range, although I'll have to analyze this stock again. And then one of the hotter stocks that have been mentioned time and again in the recent press right now would be Alibaba. With the US-China tension and the dispute between the company and its home country China, the stock has been pressured down very heavily from its top. So this is also another fundamentally strong stock that I believe in that would be performing very well in the long term. Next, we have some of the defensives you might want to pay attention to. McDonald's. I'll be modifying and refining certain parts of the value investing strategy. So do watch out for those modifications and apply the evaluation technique yourself on this company to see whether these stocks are worth your time investing in. Besides McDonald's, Yum China is also another stock that used to be at fair valuation and starting to go into an overvalued boundary. Right, so at a price of about 57.5, I believe it can still be considered fair valued. So if it does come back down to that range, I'll be selling cash secured puts, aiming to own the stock at that price. Okay, and more on defensives would be LMT. LMT is one of the big company that is in charge of manufacturing defense equipment for the US. And I believe that this stock is currently at fair valuation or undervaluation. So you can see that it has been consolidating for most part of 2020. Due to reasons that are unknown to me, it has been breaking down out of its consolidation range. Alright, so do pay attention to this stock if you're interested for long-term investing. And lastly, to gain some exposure into what I call the crazy and hot stocks out there, such as Tesla, I'll be looking at some of the Ark ETFs. So ARKK is one of them. I'll be keeping my position in these stocks small if I manage to get into it, and I will not be directly buying into the ETF itself. Currently, it is quite high up there. When it retraces back to the moving averages, I will be looking to sell cash secured puts on it. Right, so if we look at this stock, volatility for it is extremely high. The current IV percentile is at 52%, and if you know what that means, cash premiums for these options are very rich. And the money put options are going for around $9 at a strike of 141, representing about a 7 to 8% premium relative to strike prices. So I'll likely be selling a cash secured put at a strike that is quite far away, collecting 2.5 to 2% premium a month, waiting for stock prices to come down to hit the strike price before I get into the stock and gain an exposure to those hot and crazy stocks out there. Alright, so that is basically my focus for 2021. And With that, let's aim to beat the S&P 500 again this year by buying into fundamentally strong stocks when they are at a great discount. With that, I wish all of you all the best for 2021 and have a great year ahead. Do leave a like and subscribe, as well as turn on the bell notification to receive first-hand updates on new content coming your way. Thank you for watching, and I'll see you in the next video.